What's up, guys? Welcome to a new video. Today is the 20th February of 2022, and it's been a while that I made a video. So without further ado, let's get it started. So the Bitcoin price is at $38,260, and it's been a while because Bitcoin was doing the most. We were going in an uptrend, but as you can see lately, we are going down. And yeah, the trend line is basically switched, and we're going down. We're gonna revisit some lower levels for some more support and to continue to these new prices. But for now, we do think I do think that we go much further than it is. So what does this do with the current market? As you can see, Ethereum is at 2,627, Bitcoin at 38,000, Solana 89, Binance 380, Cardano 93 cents. So it has a pretty much big effect on the overall market. So it's not financial advice, but I do consider not to buy at this moment. Pretty much wait until Bitcoin has find a bottom, and at that moment I would do some buying. So what's been happening lately? So lately there's a big invasion with the whole Ukraine and Russia. Russia is pretty much preparing itself to intervene to go in war with Ukraine. The whole narrative is Russia, Putin don't want, he doesn't want that Ukraine gonna enter the European NATO. He doesn't want Ukraine to enter the NATO, the whole NATO agreement with different countries. He basically wants that Ukraine still gonna stay with his part of Russia. So that's the whole war, the conflict is about. And there has been a lot of big statements, makes threats, and they basically organized the whole military at the border of Ukraine and Russia. So that also affects the financial market. So what does the Ukraine crisis mean for markets? The conflict between Russia and Ukraine may contribute to the increased short-term market. So this is an article that I also will put in the subscriptions, and it's for you just to check it out. But I will explain a few points. Disruption of Russia energy exports as a result of the conflict could temporarily contribute to the rise in global energy prices. We all know that Europe basically buys a lot of gas from Ukraine, from Russia. So yeah, it's gonna have a major effect on Europe. And I live in the Netherlands, so we are gonna see that. Most recently, we have seen the gas prices has reached new prices, new high prices. So it's all because of this conflict. So I will continue. While tensions between Russia and Ukraine has been rising for years, the current Russian military buildup near the two countries' borders could possibly lead to military action. It also is creating concerns about the potential impact of the conflict on financial markets and the global economy. Fortunately, however, history shows that while geopolitical crises as the one unfolding between Russia and Ukraine can temporarily roil markets, they don't typically have long-term consequences for investors. Still, because Russia is also the source of 10% of the world's energy and nearly 50% of the energy consumed in Europe, as I told, a possible conflict does pose risks that could extend beyond the two countries' borders, including higher energy prices and increased financial market volatility. What happened in the short term? The severity of any potential market and economic disruption depends in part on what action Russia takes. Fertility, geopolitical risk. Analyst David Bear says the conflict could take a variety of forms and continue for some time. Another factor that would likely influence the impact of the situation on the economy and market is how forcefully the US and Europe might respond with economic sanctions against Russia. Yeah, against Russia. Russia in turn could react to any sanction against the financial interest by restricting energy exports particularly of natural gas to Europe. The impact of the conflict are likely to vary depending on geography. Europe, and particularly countries such as the Baltic states and Poland, would be likely to experience more negative impact than would countries that depend less on Russia for energy. Western Europe, particularly Germany, also has no easy alternative source of energy to replace Russia. So Russia is in a big position because of they basically provide energy for a lot of European countries, so they're in a good position. So a lot of European countries basically don't know what they're gonna do because they basically don't have another person who, another country who can deliver their energy. As the article said, 10% of the world's energy and 50% of the energy consumed in Europe. So that's a good position for Russia. From investment standpoint, the biggest impact would likely be negative market sentiment on Russia's stock, bonds, and currency. Hofscher says that the Russian military action against Ukraine also possesses a relatively short-term risk to energy prices. It could drive up prices of oil, natural gas, and other commodities at a time when inflation is already a problem. Higher oil and gas could further benefit North American energy company whose stocks has been. So let's see what the price of oil is at this moment. It's $92 a gallon, so that's pretty much high. The overall price and the average was around $70, so that's some big price. And let's see, for gas is also same price, $92, and it has an overall high of, back in December last year, it was $178. So yeah, there has been some changes. There has been some changes in this whole crisis. So yeah, for his investment, I do suggest you guys to know what your next move's gonna be, considering the whole Ukraine and the whole Russia beef. So keep that in mind with your investments. And as you can see, the total financial market and stocks market are pretty much going down because the sentiment is not very positive. So keep that in mind. Okay, my next subject is the NFT market. As you can see in front of you, there's a chart, and this chart is basically telling you that the volume of the NFT market is going down. We had back in January, there basically was an NFT season. It was very booming. A lot of projects went up to new all-time highs. Referring to the Bored Apes and a few other big project CryptoPunks, they all were around 50 or 70 ETH. But we now see significant downtrend, and the volume, the 24-hour volume is at 167 million. So that's pretty low, considering that the volume was on February this year was around 924. So that's very low. So keep that in mind, guys. It's likely to say that we are in a bear market as of the NFTs. So I'm still bullish on the whole NFT space, but we have to consider what's pretty much happening right now. So keep that in mind. My next subject is the yield curve. This is an article by Marco, and what he's been telling in this article is basically what we have seen lately. In the start of summer 2021, the yield curve has been flattened as a quick pace, reflecting a slowdown in a growth impulse, and the Fed marginally tightened their stance. And the slowdown in growth impulse is well captured in this chart from the excellent Eric Bushmash, which shows the 6M annualized growth rate. So what did we see? Back in May and April, we basically seen that the yield curve had been flattened. So that also was the same reason why Bitcoin here made a U-turn. We had an all-time high of 64,000, and at this point you have seen the yield curve basically been flattened, as you can see in this chart. So that was the moment that Bitcoin was basically going another direction. And further in this year, in that same year, um, we have seen that the Fed also made an announcement on November that they will start tapering. So meaning they will stop pumping money in the overall market, and they will increase the yield rates. So they will increase the interest rates. So when money is expensive, that means people not gonna buy, not gonna spend a lot of money because it's too expensive. When money is low and it's cheap to lend money, it's basically free money on the market. So it's basically a cycle what's been continuing for years. And as of the November of 2021, last year, this was the moment right here. As you can see, the Fed message to start tapering, increasing rates. So it was back in November 2021. There was the moment when the whole narrative of the free money on the market basically turned around. So as you can see, it also play a part on Bitcoin. And what you also can see is that it sure made a big play on the investment market. As you can see, here's where you can see that it basically reached the top. So there was the moment when Jeff Bezos and Elon Musk sold their shares, and I do think that in the next few weeks we're gonna see a big declining of the market, and we're going back at these 3,000 levels. So for the Nasdaq, so Nasdaq is basically the chart that you have to follow, which basically is going to tell you what the overall market is going to do. So the current level is at 14,000, 30,994 to be exact, and I do think that we can reach much lower. We can either see those COVID numbers back in March of 2020. So that will be around 10,000, 9,000. So keep these prices in mind. Consider these prices, and yeah, it's not financial advice, but consider these prices to know what you're gonna do for your next move. So as I continue, there's quite a bit of room to raise rates without hurting the labor market, and tighter financial conditions don't matter until they threaten our dual mandate. So what the Fed is trying to do, they basically are trying to raise the rates, but they don't want to hurt the labor market, the real economy. So what they're trying to do, they step by step, they try to raise the rates, but they don't want to hurt the real economics. So it's a hard task because the whole overall market is basically built on artificial money. So it could be a difficult task for the Federal Reserve to accomplish. But in the meantime, it means that we can play on these changements on the market and yeah, basically know what our next move is going to be. So one of these moves is basically short Bitcoin. As you can see, Bitcoin is also going down because of the whole narrative that has been changed from the Federal Reserve. And what we can do is basically short Bitcoin and also try to play on the Russell 2000. Now, the Russell 2000 are stocks that basically will rise because of the earnings that they've been making. But since they haven't made some big earnings lately, that means that the price of the share won't go up. Now, what are the stocks on the Russell 2000? Here are a few to name. Number one, AMC. If you follow my channel, you know that I'm very familiar with AMC. The whole short squeeze, it's still in play. The big players still not have covered their positions, so that means it's still in play. So there's still a possibility to the short squeeze. But AMC is doing well, but they also have a few debts. But because of the whole short selling from the CEO, Adam Aaron. We also have seen that the stock is going down lately for a few weeks now. So the current price of AMC is $17.90, and the moment when everything went down is basically when we had a squeeze back in June 2021, and we've been consolidating till now, and there has been a lot of activities in the dark pools, so they've been manipulating this price heavily. So they've been manipulating this price heavy. So yeah, I do think that AMC still got chance to go lower, and that will be the moment for me to buy. So it could be around the $10, maybe $8. So that would be a good buy for me. So what are the other stocks on the Russell 2000 that are Synaptics, Latest, East Group Properties, BG, Tenet, Healthcare, WillScott? So all these companies on the Russell 2000 are basically companies that you can get in because they need earnings to go up. And since they can make a lot of good earnings for the past year because of the whole COVID and etc., I do think that we could buy these stocks at some lower prices. Do your own due diligence. It's not financial advice, but it's a good possibility that we could buy these stocks at some lower prices. They need earnings to increase. And what we also can do, we can also check out some Chinese stocks. So this is the Russell 2000. As you can see, we had a top back in April, May. It's the same moment when the Federal Reserve said that they're gonna stop tapering. So yeah, I do think that we could reach these lower levels for the Russell 2000. And yeah, that would be my advice, to go check these stocks on the Russell 2000 to do your investments. So yeah, this is basically the video that I wanted to share with you guys. Hit me up on my Twitter, joopvdclips.eth. Excuse me. And yeah, I'm pretty much invested in Joop. Also, the whole Magic ecosystem, I do like it. Magic is doing great, and Strong is doing good also. But I do think that it will reach the 237 levels, and there will be a good buy opportunity for me. So in case of the whole yield curve article, go check that out. I will put it in the subscription. And yeah, for the long term, the stocks market will go a little bit high, but in the long term, and when I say long term, it will be in the next 2 years, 5 years, we won't see a lot of changement. And that's also something that Mark was talking about in this whole article. He used the 5-year 30-year slope, and the average length of the federal tightening cycle tends to historically around 3 or 5 years, while 30 yields reflect long-term expectations for nominal growth and term. So yeah, he basically used the slope of the US 5 years to get the OIS, the overnight index swaps, where it's also considering the interest rates of the Federal Reserve. So I highly suggest for you to go check that article, and I will finish with the conclusion. So the conclusion of this whole article is as said. The slope of the 5-year OIS curve is likely to invert soon. Today it trades at 16 base points, and Powell didn't remove the hawkish Fed tail risk, hike in March or hiking at every meeting, and validated the aggressive hiking cycle pricing amidst a clear slowdown in the economic growth impulse. This matters a lot, as yield curve inversions not only predict, but they actually contribute to the sharp economic slowdowns. As refinance credit becomes prohibitively expensive today, while markets already price in poor expectation for long-term growth, the economic engine actually slows down and vicious circle unfold. If you enjoy my work, please consider clicking. I would suggest you to check this article. What he's basically saying is that we will see a big market slowdown, and yeah, because of the whole Federal Reserve, the big engine is about to stop, and that will be the big reason why we're going to see the market's going to slow down, and that will be a good buy opportunity for us. So with that being said, I hope you like this video. Like and subscribe, and I will check you guys in the next video. Peace. Bang, bang.